Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Standing today on 27th October 2020, which is precisely 5 a.m. in the morning, Singapore time, I'm going to be speaking about a very important topic, which is 1 plus 1 is not 2, rather, 1 plus 1 is 22. But before I speak, let me remind you that like any other YouTube video, our YouTube video also having a dialog box. In this dialog box, there is a description followed by a link. And if you click on the link, then you would reach to the free groups of Treasury Consulting where we share a lot of information, which includes YouTube, Twitter, LinkedIn, WhatsApp, Facebook, Telegram, and many. We all understand that the world economy is going from a very deep recession. And as I speak on 27th October 2020, United States indices are in red. As I speak, and if I look at my left hand side on my Bloomberg terminal or Reuters terminal, then I can clearly see that Dow is at least 700 point down. Standard and Poor and Nasdaq is also 100 and 200 point down. This is something which is not exceptional in nature because this is bound to happen. And history is a witness that 1 week before US election, markets are always volatile in nature. So guys, I might not be surprised provided, another 4 to 5 days, you will see the similar kind of market. Well, there are many people, those who call this as risk off, but I'm sorry, I don't call this as risk off because risk off is a complete different thing. But having said that, as we speak, unfortunately, the globe is having around 43 million coronavirus cases across. And they are rising by at least 400k per day, which precisely means in less than 3 days, the world is adding around 1 million plus cases. And if this trend would continue, God is the only savior. Maybe the world would cross 100 million by December 2020, maybe much earlier than that, because winters are on the cards in India, US, and Europe. And US and European winters are very, very stringent as compared to the Indian winters. So we needs to be very, very careful in that regards. Of course, whatever is happening across, this is surely putting some or other form of impact on the Indian indices. Like, I'm sure when the tomorrow market opens up in India, you will see a replica of what is happening in the Dow Jones. And I might not be surprised that Sensex, who somehow survived 40,000 today, maybe it is going to be 39,500, or I can say that Nifty, which is somehow saving 11,000, maybe it break 11,000 and goes to 10,500 points. No comments on Bank Nifty, and this is what I'm going to speak today because I am never be a happy person as far as the Indian bank disclosures are concerned. Considering this regard, there is a cat and mouse rate race which is happening in India, which is we got the news that Kotak Mahindra Bank is evaluating and maybe they are in a discussion mode with IndusInd Bank regarding a possible takeover. We all understand that after Yes Bank crash, which happened somewhere in March 2020, IndusInd Bank is not in a right state. IndusInd Bank, who used to trade around 1700 rupees per share, is now closer to around 600. And today it is 600, but I think if I exclude the last 2 months, then the share was almost, you can say, 500 rupees per share, and several times it was around 284 as well. But before I go ahead, I got some statistics, and the statistics is like that. The net profit of IndusInd Bank is around 510 crores, while for Kotak Mahindra Bank is at 1853 crores, which is 3 times at least. While the total income of IndusInd is around 8,600 crores, the Kotak Mahindra is around 12,000 crores. So around 50% more, you can say. Half a times more, you can say. So net income is three times while, sorry, net profit is three times while net income is half a times, which is 50%, right? While gross NPA, and I'm really not sure why Indian media and Indian auditors are always in love with gross NPA, because I strongly feel that gross NPA is not the right barometer. As we are moving towards Basel III, which is a mandatory conversion in 2023, the right definition is definitely the ECL, which is expected credit losses. But I'm sure even 99% of the people, those who are watching this video, they are themselves not sure about ECL, and no words on regulator. But still, go with the media. The gross NPA is around 5,100 crore, which is roughly 2.5% of advances. While in case of IndusInd Bank, it is around 6,300 crores, which is around 2.7% of advances. Market cap for IndusInd is around 46,000 crores, while for Kotak Mahindra is 2,75,000 crores. So, which is precisely more than, I would say, somewhere between 5.5 to 6 times of IndusInd Bank. So here it is a big lead. Total asset is also not bad. Total asset is around 2.75 trillion, which is 2,75,000 crores of IndusInd, while in case of Kotak Mahindra, it is 4.58, which is roughly 4.6. If I cannot say double, but I can say at least 1.5 times. So income is three times, sorry, net profit is three times, income is 50% more, gross NPA little bit higher, right? Market cap phenomenal, at least 5.5 times. Total asset is at least 1.5 times, between 1.5 to 2 times. So in so-called parameters suggested by Indian media, that IndusInd Bank, Kotak Mahindra Bank is leading the show. Although the IndusInd Bank completely denies this rumor, but as we clearly understand that the Indian banking is moving towards the world of consolidation from either side. Number one, the government himself trying to reduce the size of the Indian banks either via M&A route or via buyout route. And I'm sure that right now the global economy is in mess, no doubt about that. But there are bright hopes for 2021. And once the green shots, I'm sure many economists 2 months ago said that Indian economy would be facing green shots in fourth quarter. But how many green shots you know? Don't go on my t-shirt. And I'm sure that green shots would be visible somewhere in the second quarter of 2021. I don't think much earlier than that. But the point is very clear. The point is not the data. The point is not the consolidation. The point is how are we going to be monetize that? Because I'm sure that one thing which I always understand and one thing which I always appreciate, there is no smoke without fire. So if there is smoke which is coming, it means it's some or other form of fire is going on. Maybe that fire is nearby or maybe it is far by, to be honest. To be honest, I feel that it is not the right time to take a position in IndusInd Bank, because such big acquisitions require time. And the major issue is the swap ratio. That is one thing. Another issue is definitely the shareholders' approval, which is not easy. It is not an easy. So I'm sure that IndusInd and Kotak both not having one or two shareholders, they are having several thousand shareholders and taking a joint approval, that to unanimously is really a tricky job, let it be honest. Third, such kind of consolidations require regulatory approval, so that it should not happen that there is a cartel in the market. And I'm sure that for a minute, I assume this transaction go through, and both parties, Kotak and IndusInd, decided to go ahead and assuming, just take a hypothetical example, swap ratio is 3:1 for a minute, I assume. Then this create a cartel in the banking, because one side you are having HDFC, and why HDFC? HDFC plus HDFC Bank, huge. Other side you have Kotak plus IndusInd. If not equal, then if not less as well. And I really don't think that apart from SBI, there is any other bank who is really on the left or the right side of such conglomerates. And this create a big cartel in the system. And we all understand that the history of cartelism is conducive or not conducive. I really don't think that our desk as of now is not taking any position in Kotak and IndusInd. First of all, we feel that Kotak Mahindra is really far away from intrinsic value, so taking position is very, very risky. And especially today when Kotak declared good results, we are happy and stock price moved by 60 rupees. I'm sure there are many punters who are doing daily F&O deals, but we are not a punter, we are a trader. There is a difference between punter and a trader, and that I think we need to understand. I always believe that the young generation need to understand the difference between punting and trading. And punting, 1 out of 10 is win, rest 9 is loss. While trading, 1 out of 10 in loss, rest 9 in profit. And trading plus research plus patience, this is the USP of treasury consulting. We trade, not punt. We do research like we did on Kotak Mahindra and IndusInd, and plus the patience. As of now, we are not going to be taking any position in Kotak Mahindra and IndusInd, but having said that, of course, both parties denied, especially IndusInd Bank, but this is another thing on our radar now. I don't know, a small team need to handle so many things. That's a hats off, to be honest, but that is another thing on the radar, and I think that soon we would be taking position in that. We will definitely let our clients know in that regards, but I'm sure, one thing I'm sure of, sure doesn't mean Kotak IndusInd merger, that sooner or later, big movements is expected in the Indian banking system. And that's for sure, because now Blackstone is in touch with L&T Mutual Fund. And I'm sure the kind of history Blackstone is, the kind of firepower Blackstone is, the deal is not very difficult for them. Only time will tell till what extent Blackstone would be able to monetize that deal in the near future. We need to wait and watch. Several non-banking financial companies sold their stake to multiple banks. During March till, you can say, September, many Indian banks raised handsome amount of money, and several qualified institutional buyers and sovereign wealth fund came and invested in banks. So foreign participation is happening. Now, if I say that foreign participation is not all about consolidation, then I am the biggest idiot, because foreign participation is just like a slow accumulation. So they invest 1%, slowly they go 2%, 3%, 4%, and time is not far when they reach to 10 to 15% when they come on the board. The day they come on the board, rest we all understand. So there is a hell lot of action which is happening in the Indian banking. And guys, one of the important thing that is really, hitting me from inside is, if Blackstone and L&T deal went through, and I'm very hopeful that it would happen, then I'm sure that there are another targets in the list. Because if I go to the website of Association of Mutual Fund of India, there are around 44 plus mutual funds we have in India. Some are big, HDFC, ICICI, SBI, and but some are small. And L&T is neither a pretty big player, not a very small player. If L&T deal went through, then I'm sure that the potential targets are more. And considering the way Indian mutual fund industry is going through, when there is almost zero innovation which is happening, I've hardly seen any Indian mutual fund came up with a very decent product in the last 2 years. Everyone is doing copycat. So one create a product, others copy. And this is how the things are going in the Indian financial system. I'm sure that there are much action which is on the cards in the Indian financial system, and to be very honest, we are deeply evaluating these news, and I'm a very strong believer of the fact that some big action is on the cards. And it would be nice if treasury consulting will take position much earlier than the big action, just like pharmaceutical. Today we sold a pharmaceutical stock at around 47% profit in less than 1 month. We bought this stock and today we sold with 47% profit in less than 1 month. And this is not the end of the story. There are many pharmaceutical stocks we are having on the cards. We bought at a very early prices. So this is good, and we will definitely keep you posted about that. Let's see how it happens. But if this happens, then it would be a challenging situation for HDFC. But once again, if I'm speaking about that, that doesn't mean that I'm happy about the disclosures of any of the Indian bank. And I publicly speak that the way Indian bank disclose their balance sheet versus the way American banks disclose their balance sheet, the difference is Switzerland and Shimla. American banks disclosure is like Switzerland, while Indian bank disclosure is like Shimla. Maybe to few Indian graduates, those who are MBA in MBA institutions, they may get a kind of, I would say, kind of prep course or kind of projects on Indian financial institutions. But if you compare the annual report of Goldman, JP Morgan, Standard Chartered, and Deutsche, Barclays, it is like exorbitant. Too much information they are revealing, and sometimes it is difficult to digest. This is Rahul from Treasury Consulting. You know our WhatsApp 9818485155. Treasury Consulting desk is keenly evaluating all the happenings which are moving across the globe, and as we speak we are precisely 7 days away from US elections, and expect a big mess off. Today is a demo. I might not be surprised that if in the whole week, which is another 4 days to go, you know I might not be surprised this scene would continue. This is Rahul from Treasury Consulting. You know our WhatsApp. Have a great time, guys. Talk soon.